Hi, everybody. Today, I want to talk about managing risk for better returns. We've talked about the concept of risk already, but now I want to get specific. There's certain types of risks that scare people away from investing. But here's the thing. I don't make decisions based on fear. Sure, you want to acknowledge risks and make wise decisions, but when risk turns to fear and fear keeps you from making decisions, you get stuck. And when you're stuck, you don't do anything. You sit and hide. And when you're paralyzed with your money, you totally miss out on the power of compound interest. Every year you put off the decision to invest, you're losing tens or even hundreds of thousands of dollars. If you want to be scared of something, be scared of that. Be scared of retiring broke because you're letting risk keep you from investing. So let's talk about 3 things that investing risks to be focused on. Because if you can understand some basics related to risk and return, it can definitely help you feel more comfortable and confident when it comes to long-term investing. So investing risk number 1, you could lose money. I won't lie to you, if you invest in the market, you have the potential to lose money. Of course, there are things to minimize that risk, but there's always that risk there that you could lose money. The ups and downs of the market are generally referred to as market volatility. Sometimes when people read their monthly statement, they see that they've lost money, they panic and actually pull their money out of their investments. They jump off the roller coaster in the middle of the ride. To make matters worse, they're selling their investments when they're at their worst price. That's the wrong way to go. You want to buy when prices are low and sell when prices are high. So when I see a big dip in the market, I act like that investments are on sale. That's when I try to pull some extra money together and make some new investments. Investing risk number 2, getting beaten up by inflation. We all are familiar with the effect of inflation, whether we realize it or not. We realize that things cost a little more every year. It feels like your money buys a little less. That's because of inflation. For example, let's say inflation averages 3% a year. That means things cost 3% more today than they did a year ago. It also means that your money is worth 3% less than it was a year ago because you can't buy as much with it. So if you put $100 in a cookie jar, you might be only buy $97 worth of stuff the next year. And then next year would be $94. If you keep that money, that $100 in a jar for 20 years, you would only be able to buy $40 worth of stuff in 20 years. That's at 3% inflation, which is very normal and common. So your $100 after 20 years in a cookie jar, it basically looks like 2 $20 bills. So much for the security of stashing money in a cookie jar. It's the hidden risk. It's called inflation. People are afraid of investing and they stick with saving cash the rest of their life. But the idea of stuffing money in a mattress or something like that. But the problem is the cookie jar carries too much risk. Sure, you could lose your money investing in the market, but you're also losing money if you're sitting in a cookie jar because of inflation. The point I'm trying to make here is you aren't staying free from risk by staying out of investing. In fact, you're guaranteeing you will lose money over the long term if you stick your cash in a cookie jar. So how do you avoid the risk of inflation? This one is pretty simple. You need to earn more than the rate of inflation. Your investments need to run faster than inflation to avoid being tackled from behind. Investing risk number 3, putting all your eggs in one basket. This is the scariest risk of all. You know the image. You put all your eggs in one basket and your basket breaks, what happens? You lose all your eggs. And you will have left a mess. Nobody wants that. The biggest danger here is putting too much money in any one type of investment, no matter what the investment might be. If that one particular investment takes a loss, and especially a serious loss, you risk losing significant money. So how do you avoid the risk of losing all your money? Diversification. Diversification. Now, that's a big word, right? That's one of those $10 words that financial advisors use, but it's not complicated. It simply means to spread your investments around. Spread your money around several different types of investments, levels out the risk and the roller coaster ride of investing. So diversification. So there are 3 risks to address and be aware of that will be aware that number 1, you could lose money. Number 2, it could be eaten up by inflation. Number 3, diversification and the risk of putting all your eggs in one basket. So I hope that helps. 3 simple ideas about getting over a lot of these risks, getting over a lot of these fears that we have and the things we keep us from investing. So thank you so much for stopping by the channel. Thank you for subscribing. If you would hit the subscribe button, hit the bell for notifications on new videos. And we thank you so much for stopping by. Talk to you again soon. Bye for now.